What's up, jewelers? Welcome back to the channel, Financial Jewels Investing. This video is part 2 of a 2-part series titled Wartime ETFs. If you have not watched part 1 of this series, please click on the video that pops up at the end of this video. Part 1 video focuses on 2 defense ETFs. Today's video will focus on 2 energy ETFs. Remember, these are the 2 sectors where money flows during wartime. If you appreciate content like this that is intended to grow your financial status, please like this video and subscribe to the channel. The YouTube algorithm is just that, an algorithm. If you watch but you do not engage, YouTube assumes this video is not worth presenting to new audience. Like, subscribe, and share the video to everyone on your contact list. Jewelers, let's go! The next 2 ETFs are from the energy sector. So the first ETF that I want to discuss is called State Street Energy Select SPDR ETF, ticker symbol XLE. The profile reads, it generally invests substantially all, but at least 95% of its funds into companies from the following industries: oil, gas, consumable fuels, energy equipment. These are the companies that this ETF XLE invests in. At least 95% of its total assets are invested in these companies. Now let's take a look at the expense ratio for this ETF. The expense ratio is 0.08%, significantly lower than the previous 2 ETFs that I covered. So the average expense ratio for the energy sector is 0.92%. However, for this ETF, XLE, the expense ratio is 0.08%. That is really good compared to the companies in its sector. Now let's take a look at the top 10 holdings. First, you will see a company called ExxonMobil. 24% of the total assets that come into this ETF are going into ExxonMobil. So if you are tired of paying these high gas prices during this wartime, you can get some money back through your investment by investing into these gas companies. The next company that this ETF invests in is Chevron Corporation. I'm sure you've heard of Chevron. 17% of the funds that come through this ETF are invested into Chevron. So you have almost 40% of the funds that come through this ETF, they are invested in those 2 gas companies. So you don't have to go out and find the next big gas company. You can invest in an ETF and it will pretty much invest in the companies that it knows will make it money. And the cool thing about this ETF, it also pays a higher dividend than the first 2. So you are getting money back every quarter because you own shares of this ETF. Guys, what are you waiting on to become an investor? Again, I am just some random person on YouTube. I'm not your financial advisor. Investing has risk. Not investing has risk as well. You're already paying for higher gas prices. You can't avoid it. You're already paying for more, higher food costs. You can't avoid it. So get in the market, and right now is a good time to get in the market. It's not going straight up. Right now, it's time of uncertainty. This is the best time to be certain about the market. Hit that subscription button, hit the like button, leave a comment below. Please engage in this video. Let the YouTube algorithm know that you appreciate this content, and let your friends and family know that you appreciate this content by sharing this information with. Now let's look at the performance tab for this ETF XLE. And this ETF, you can see the performance tab all the way back to 1999. In 1999, the total annual return for this ETF was 18%. 19.65%. In 2000, 23.67%. Let's fast forward this to 2021, a whopping 53% return, and in 2022, 64% return. Now, this ETF have seen some hard times. In 2020, it saw hard times. It lost 32% of its value in just 1 year. And in 2018, it lost 18% of its value in 1 year. So this just proves exactly what I told you. Investing has risk. You will win and you will also lose, but you have to stick it out. If you stick it out for the long term, 10 years plus, you will see gain. Now imagine if in 2020 you panic because you lost 32% of your portfolio, you panic and you sold. You would have missed out on the 53% return in 2021. You would have missed out on the 64% return in 2022. You would have missed out on the 5.52% return in 2024 and the 7.88% return in 2025. All because you panicked over a 32% loss. That is why you need Financial Jewels investing. I want to shift your mindset. During wartime, during downtime, that is not the time for you to panic and sell. That is the time for you to accumulate. Please type accumulate in the chat box. Type accumulate in the chat box. You need to be accumulating assets right now as we speak. While everyone is panicking, you are accumulating. This is your building phase. The next energy ETF that we're going to discuss is the Vanguard Energy Index ETF. VDE is the ticker symbol. Remember, once again, fractional shares. You can still partake and be an investor in this ETF by purchasing fractional shares. Purchase for the amount that you have. Do not stress yourself out because you don't have $100,000 to invest. You don't have $10,000 to invest. You don't have $1,000 to invest. It's okay. If you have $10, you can invest $10. You will simply get the fractional returns. So when we look at the profile section of this ETF, it states that this ETF, VDE, it invests in large U.S., large, mid, and small companies in the energy sector. It employs over 95% of its total assets into these U.S. companies. The expense ratio for VDE is 0.09%, slightly higher than XLE, but much lower than the first two defense ETFs that I discussed. Let's take a look at the top 10 holdings for VDE. Number 1, ExxonMobil. Over 22% of the total assets from this fund goes into ExxonMobil. Chevron Corporation is the second company that is invested in this ETF, and over 14% of the total assets are invested in Chevron Company. As you can see, these two ETFs, these two energy ETFs, they are invested in similar companies, and you're going to notice this pattern with well-performing ETFs. Now let's take a look at the performance. The year-to-date performance for this ETF is 31% compared to others in its category, returning 23%. The 1-year return for this ETF is 34%, and the 3-year return for this ETF is 19.64%. Now let's take a look at the history of annual returns for VDE. We can go all the way back to 2005. Let's take a look at year 2022. Now remember, year 2022, a lot of stocks, a lot of ETFs were not performing, but this ETF, VDE, returned over 62% in year 2022. In year 2021, what happened in 2021? COVID. Yes, 2020 2020, 2021, COVID. This ETF in 2021 returned 56%. In year 20, it lost 33%. So again, this is an opportunity to learn here. If you panicked during COVID and you sold and you lost 33% and you said, this is it, I'm never investing ever again, you did not take advantage of what was to follow, because the next 4 years were all positive years, with the exception of 2023, where you broke even. So you would not have seen the 56% return in 2022 if you would have sold in 2020. You would not have seen the 62% return in 2023. You would not have seen the 6% return in 2024 or the 7% return in 2025. All because you panicked and sold because you lost 33%. Moral of the story, don't sell when you're down. If you are invested in good stocks and in good ETF, do not sell when you're down. The market always bounces back, and it will. It will bounce back. The American economy is not going to crash forever. When the market crashes, that's part of the norm. That is norm. We're about to go into a recession. No one knows exactly when this recession will happen, but that's normal. That doesn't mean anything is wrong with the economy. It just means that the economy is cleaning itself up. It's fixing itself. You need to position yourself so you can have money, so you know what to do with that money. That is why you need to stick with Financial Jewels Investing. We educate you on where to invest your money, how to invest your money. So please reach out to us, financialjewelsinvesting@gmail.com, or just come to our page, go to view channel, click play mix, and all of the videos on this channel will play for you. Type in the comment box, wartime VDE. Come on, type in the comment box, wartime VDE, if you are impressed with the returns for this ETF. Jewelers, as I stated before, during wartime, it's bad for everyone, but it's actually pretty good for investors. Jewelers, remember one thing. Broke people react to the news. Wealthy people position themselves before and during it. Which one are you? This is Financial Jewels Investing. We don't just watch the market, we move with the market.